Euro-Swiss daily forecast March 1st, FXEmpire.com. The Euro-Swiss pair essentially fell off a cliff on Wednesday as Federal Reserve Chairman uh, rocked the markets by not suggesting any form of quantitative easing at all during his congressional Q&A session. The lack of injections of easing liquidity into the markets uh, got people thinking differently about the dollar, and they essentially turned around and ran into it. The markets have been running on basically what amounts to a sugar high for a few years now, and the fact that Ben Bernanke and the ECB both suggested that perhaps that round may be coming to an end, as there was no mention of a third LTRO, after the event and the announcements of the totals were given to the public. Traders took that as a bad sign as well, as it meant no more almost virtually free money from the European Central Bank. With all of this being said, the technical pattern didn't look very healthy at all either. We had a 200-day moving average that was sitting right there at the top of the price, the 50% retrace, which was right there, and then of course the 135 level, which is a significant round number. This always looked bearish, but the fact that the cheap and easy money isn't necessarily going to be there now, that really spooked the markets. 50% retrace is a classic place for traders to enter the market to continue the trend. So we feel that this market will more than likely, if it breaks down lower, it'll run into a bit of a bump at 132.50, but we think it heads down to 130. A sub 130 daily close, however, has us falling much farther. We are willing to sell roundlies and a break of the bottom. In order to buy, we need to see a post 135 close.